Hello and welcome to another episode of Daily Market Mastery with me, Christian Rauchenwald, on this Tuesday afternoon. For me, I hope you all had a great start into the new week. As always, before we jump into the markets, let's get the usual disclaimer out of the way first. Everything that I share in this live stream / video is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. Besides that, all the tools that you see in this live stream / video are linked in the video description down below. So the broker, the charting software, the strategy I'm following, and as always, the one thing I can recommend if you haven't done so is go and check out the Elliott Wave principle, which you can read online for free when you use the link in the description down below. Now with that, we can jump straight into our portfolio. We can see that today we have a slightly red start into the day. That's because GameStop has been going up yesterday, and therefore we're having a retracement now. As you noticed yesterday during the stream, we still had the $30 call options that expired this Friday. And however, I'm not sure if it's still showing up in the history. Yes, it does. I decided actually to close out that trade and roll them into next Friday for a net premium of $300. So as you can see, we closed out the $30 calls for this Friday and instead we bought them back and instead sold or rolled the $30, $31, $32, $33, and $35 calls for next week, netting us a net premium of $300, which means last week we had around $175 in premium. However, we had to buy back that option for $113. So for last week, we're only looking at around $60 in premium. However, on the other hand, we got higher strike prices. So if GameStop goes up now, we basically have one call option that is calls away 100 shares at $30, one at $31, one at $32, one at $33, and one at $35. We might consider rolling them again. We'll see how the markets are today. We're actually going to start out with GameStop in this case for today. And we can see, I did not update that from yesterday. You can see where I decided to actually roll the options. Now that's from November 7th. That's from yesterday. So you can see here, oh no, that's where I actually bought shares. So that's, why does it say November 7th? Yeah, so that's actually also where I rolled the options yesterday. So basically, because the price moved further up, we got to the point where the premium for next week was high enough while the premium for the options that we rolled was low enough to actually justify the move. We can see that we've exceeded our small scale targets. So those would be that one. Which pretty much means the assumption here that this is 1, 2, 3, 4 was wrong on the smaller scale. However, which most likely makes this very, very interesting because it might mean that we're looking at this here, where we again see 1, 2, 3, and now 4. 4 quite drastically retraced a little further. So we actually will have to zoom out a little bit to make sense of the change here, but we exceeded our profit targets a little bit yesterday already. However, today we had a retracement here. We can see that we now have a move up again. I think looking at this, we might get another retracement down. That's why we have to reanalyze parts of this. So we're going to get rid of a few things. Technically, our profit target hit. We're still below 30, but probably we're going to see. Let's see if we can make sense of this. We are going to look at it from here. Yeah, so might be looking at 1, 2, 3, 4, but then wave 5 is too high. Okay, so it's a little bit hard. So we just care about the immediate future. So in which case we would be looking at 1, 2, 3. Then, however, wave 4 cannot retrace much more because of zooming in, because then we already retraced here. Oh, come on. To 61.8%. I mean, we could still retrace. No, if that, wait 1 second. If this is 1, 2, then we would assume that we're retracing like this. So we already retraced 78.6. So I think that might not be accurate because when we look closer, as said, we can see that this looks like it's only going to be A, B, and we still have a wave C to come. So, which then makes this a very, very close call. So, okay, we're gonna have to zoom out further to make sense of that, to see where we're going. So there is the chance, depending on today's movement, that once the market opens in 20 seconds, that those options are already be decently in profit, and we might be able to roll them to other options. So buy those back and instead write other call options, maybe with the same expiration. So basically realize the profit we made here. And yeah, so markets are open. So we'll see, okay, that's what we have right now. So let's analyze this first before we jump back into the chart. So we would want to buy back for November 22nd, and we would want to buy back one, for example, 30, 31, 32, 33, and 35. November 22nd, 30, 31, 32, 33, 35. And then instead we could, for example, oh, now the premiums here got lower. Okay, so let's see what happens if we sell instead 5 $40 options. So up 5. We would actually realize a $50 credit this way. So which means we would get $50 and roll our options further out. We're actually going to do that. So if there's a strong upward move, we get more money. Riskless combination. What riskless? What's riskless here? So I don't understand how that's supposed to be riskless. We buy back 1, 2, 3, 4, 5. So if I transmit that, it refuses that because it says riskless combinations are not allowed. Okay, so let's try this again. So buying back 30, 31, 32, 33, and 35. 30, 31, 32, 33, 35. And instead selling 50, which again, oh, right now, so now we don't get a price for that. Okay, that's a little bit annoying. So why do we not get a price? So if I remove the 6th leg here, then we just have the 500 debit that we have to pay. And if on the other hand, the set, so okay, now we actually would have to pay for that. I don't want to pay for that. Unless if we roll all of them to the 35, that also, oh yeah, then we would basically not buy that one back, but instead buy 4 of that. We actually would theoretically apparently look at credit. So, and it again complains, okay. Then I don't know how we could pull this off, but technically if we close them out right now, we would realize the $300 profit in quotes, which means we actually would have to pay more than what we got because I already used the money to buy more shares. Our margin might not be sufficient to do this in 2 steps. So if we buy back that one, so no, not 5, but 1, then we're looking at $600, $500 that we pay. And if on the other hand, we sell the $40 call 5 times, so it's less. Okay, so it's not for net credit right now. And if we sell the $35 call, then basically we only would need 4, which means we would pay $430. But on the other hand, we might potentially get $500. So it might be possible to do this for a net premium. But if we wait a bit, if this turns out to be an ABC move, we can buy them back cheaper here. And okay, so we're gonna wait a bit. So first of all, we're gonna zoom out now, and our daily chart is too much, yeah. But question is, what are we retracing now? So I mean, on one hand, we have the assumption that this might be our wave 1, 2, yeah. So which then would mean this would need to be wave 1, 2, 3, 4, and then the expansion will not check out here, because then we already exceed that, which means the only clear pattern is actually from here moving forward. So if we move on a 4-hour chart, so the only clear pattern would be from here. So if we add an extension here, And then we have another clear pattern here, 1, 2, 3, 4, and that would be wave 5. Yeah, although it would be an extended wave 5. So if we let's see if that would indeed be wave 4, wave 2, and wave 3, then the profit targets for wave 5 would actually be here, which means we would right now be retracing potentially this here. And as said, then we could add an expansion here for the assumption. We need the 1 hour chart again. So for the assumption that we have our 1, 2, and are still getting A, B, and are still getting our wave C, which means the 23, 23, so the 61.8 retracement would be on the chart here, in my opinion, which again, this would require wave 1, 2, and then here we have 1, 2, 3, 4, 5. So for 1, 2, 3, 3 being close to the at least 238.2 extension. So this makes the bigger 1, 2. Oh no, that's the different one. So sorry. So here we need a different extension. Small confusion. So this would be like this. And here we bounce from the 3618. So we have 1, 2, 3, 4, 5. And then we have, I'm actually going to label that. So 1, 2, 3, 4, and this here is wave 5. And which means on the bigger scale, we have 1, 2, 3, so 1, 2, 3, and then 4 takes us down here. And then wave 5 takes us, I don't know where. So, and then here, let's double check that. We bounce at the 438.2. So it's also on one of the levels that we would expect. Oh, wave 2 terminates. Okay. That's quite important. So what's the low? Up there's our starting point. So cancel and cancel. Okay, so now we're talking. Okay, so and now, however, that changes that a little bit. So we bounce at the 438.2, still okay, yeah. Although if we use Kennedy channeling technique, we basically have our base channel here. We have the breakout here for wave 3, wave 4, and okay. Let's get rid of a few things again. And so if we use Kennedy channeling technique, what we're looking at would be, let's try 4-hour chart. Wrong direction. Still wrong direction. God, yeah. So come on, sun. Oh, yeah. Sorry for that. Okay, so now zoom in the right direction. So if we are looking here, then that's our starting point. That's our point 2, that's our point 1, and that's then our base channel. And we have the breakout from the base channel, and we basically can do this here, which then points us towards, oh no, we're still good. So we're still not in wave 4. So actually we're looking, based on Kennedy channeling technique, what we're looking at is this here. So I'm gonna try to verify that in a second. So 1, 2, 3, 4, I said I expect to take us down here, or not exactly down here. We then are basically retracing this move right now. So, and yeah, still 23 would be the target area here for, if that is not already the entire correction, which is possible for this to be some kind of 1, 2, 3, 4, and we still get a wave 5 push. So let's look closer. Visually, we are missing a wave down here, yeah? So visually, this is basically A, B, and we still miss wave C down, yeah? Visually. It doesn't always, not everything always works out perfectly. So there is the option that we actually right now are finishing another upwards move that's based on this here. So there is the option that we get very close to the $30 mark. Yeah, so don't have to, but possible that which would move this a little bit higher. Yeah. Now outside of that, based on Kennedy channeling technique, we would potentially be looking at this here, 1, 2, and that would actually be potentially either from here, no, probably not from here, but from here. So 1, 2, 3, 4, and then wave 5 should take us to this 261.8 that we currently cannot see, a little bit above the $30 mark. Yeah. So in other words, I'd expect that we potentially have our breakdown here, or not breakdown, our retracement here for wave 4, which again should take us into the area here, 22.99, 23.23, and then based on that we get our wave 5 push, and our wave 5 push would then look like this. And let's see if we get an overlap. Okay, we barely get an overlap with the 238.2. So if we indeed retrace down here, we can see that we have an overlap of this area here. So 32.16, 32.90. Yeah. So again, I think while it's possible that we get another push here first, which would then also force us to adjust this a little bit higher. Yeah, and then also affects how far we should retrace here and whatnot. Yeah. But I think visually on the 15-minute chart, it points towards we now are correcting and should go down to this area at 23.26. Doesn't change our overall prediction, which is still we go above 30. And then we get our wave 5 here for this 1, 2, 3, 4, 5, which basically finishes this 1, 2, 3. Yeah, so in the area here. So yeah, well, there's a little bit outside possible in the immediate future. No point in exiting right now because I said there's also the option that there's still first one push to come. And then after that, after either right now going down here or after first having a push a little higher to 29 and then retracing, we should then get our 5th wave for the next push up into the area around 30. So that's kind of nice. So yeah, which means for our GameStop calls that we currently have, since we cannot do the move that I would like to do, we actually just hold them the way they are. Which means it's, yeah, well, not guaranteed. It's reasonably likely that next Friday we actually get our shares called away, which might mean we miss out on a little bit of profit, but it also means that we actually made then a profit on 400 out of the 500 shares outside of the premiums that we earned. And on top of that, free up the capital again to use it to potentially sell put options again. And yeah, put options premium should also start to increase slowly with increased implied volatility, which means we should then be able to pocket a couple $100 in a week by writing, for example, $30 put options again, which would then be around $200 in premium per option, so like $1,000 for a week in premium. That either if GameStop then retraces again, gives us the shares back, or if not, just lets us pocket the premium. So much about GameStop. So it's been interesting moves yesterday still for the rest of the evening. And it's going to be interesting to see if today we get this push here, if we first get the retracement, which is what I consider the more likely scenario. And then again, we should get then another 5-wave move that takes us up here. Today we have Tuesday. So if this correction here, I mean, here the correction took from 15th to 23rd. So actually, there was a weekend in between, I guess, yeah, so or not. But yeah, so we should actually finish this week below 30. And then next week, we might have the upward move. Question is if we will finish above 30 or not. Yeah. So, but for now, yesterday that played out quite nicely while our micro predictions were a little bit off. Our targets got hit. I also was hit a little bit by FOMO. That's why I already yesterday, as we can see in our trade history, bought another 11 shares with the $300 premium that I got here. So you can see that I bought at around 27 per share. So right now those are a little bit at a loss. So yeah, because I kind of, I don't know. I mean, my thought process, so while from a logical perspective, I should have waited for the retracement to maybe enter here or here or here. But I also figured that if I buy at 27 or if I'm able to buy at 25, it's like $2 per share difference. It's not really that much in the scope of the movement that we are expecting. So, and if I'm wrong and we move further, then I just miss my entry. So increasing the position, so which means we basically now have another 11 shares. So now we have 526 shares. 500 of those we used to write call options. Actually, we had 626 shares. 100 we already transferred to computer share. 500 we used to write call options every week, and the other 26 are also paid for with the premium we got from writing the options. So it's really not that bad in quotes, because we already got some shares that we technically didn't pay for with our money, but that we paid for with the money that we made from selling or writing options. Anyway, so for GameStop, that's it. Prediction unchanged for now. We'll have to wait to see how this plays out. If we first get the push to 29 and then the retracement, or if we now get the retracement and if it hits the area that I expect here. Once we do, we actually get our exact target area. Yeah? If at all, so if it were about updating the prediction right now, right? Maybe you can do this. Instead of exactly $30, I would say we can update the prediction to $32.16. So that would be the one thing, the one adjustment that I would say makes sense right now, because we now have a little bit of more specific value. That would be the next step along the way, which is basically, what's that, 30% increase. So definitely not too bad. Now we move on to Barnes & Noble Educational, or Education Inc., where, as we expected, we are now in a small retracement. There's no point in looking at lower timeframes, because there we get then cluttered information. Right now, our assumption is that we basically have our wave 1, 2. Maybe the third wave is finished here. I'm not fully sure it is. We have our wave 4 now, A, B, C. I think it might not be finished yet, because that wave 4 might be, as said, A, B, and C. We can see that the target areas would support the 61.8 retracement, so 1042 would be a potential suitable point for this. And then from there, from the 1042, we would then get our next wave up to 1363 or 1605. Our BNet prediction is 14, is still unchanged, is still based on the bigger movement in the area of 1419 to that's what's covered here, 1976. So unchanged, and I still have my sell order to sell the 35 shares that we have, based on assuming that our wave 1, 2, 3 will take us to 17.11. So then we would get our wave 4, where we can then re-enter, and then we can, again, look at our wave 5. So that about GameStop and about BNet, and then we move on. Grab is also up. So the big question will be, will we get a break through the 535 or 590, which would be what we need to have our, in quotes, confirmation that this indeed is 1, 2, 3, because then we are definitely going to get a nice payout from our Leaps option that expires in January 26, or that will be A, B, C, and from there we actually go further down. Now we can see our grab call, while obviously it's a $50 risk that we have there total. Let's actually look at the performance profile here. So if we look at the expiration in January, it basically looks like this, that for the $50 risk, our expected profit target would be in the area of 940 to 1088 for the third wave. So 940 to 1088, and we can see, well, it's not a huge amount, but as a percentage, basically, if we're getting anywhere near that, let's say 100% move, so then we can see that it basically pays out, 8 times the risk. So if we get into the area of 940 by January, if it happens sooner, so if it happens anywhere in between, so let's say in March already, for example, then we can see that the payouts are slightly higher, but that's not that relevant right now. Moving on. So here we have some movement in Grab, but it's only relevant it's only going to be relevant towards the middle or end of next year. And our prediction, do we have a prediction in graph? Yes, we have 942 to 1088, which is exactly what we have up here. Yeah. Green wave we don't need. Novavax would be the next one where we have actually some exposure. No, come on. Okay, nothing's happening. Let's give the computer a second to do something. Or not. It doesn't complain about not responding, so but it is indeed not responding. Okay. Close and reopen. So just a minute. I also, by the way, added my Coinbase API connection today, so we can also look at some crypto movements because there's also a lot happening lately. Yeah, what we did now, GameStop and so on didn't get saved, which is a little bit annoying, so we'll have to rework that real quick. So we get rid of the stuff that we have here, and basically our assumption was for our chart was that on one hand, we have our extension here, like this. On the other hand, we have then another extension here for wave 1, wave 2, so like that, where we think we're based on Kennedy channeling technique. We had our base channel, which is here to here, here, and then we had our acceleration channel, or have our acceleration channel based on 0.1 and what I believe is 0.3, and then parallel through 0.2. 0.2 is here, and then we'll have again what I consider the most likely scenario, that we're currently retracing wave 3, which would be this move. And then here on the smaller scale, we would have on one hand, so I'm not gonna make this ABC labeling in there, so otherwise it gets too crowded, but I expect that we are going to be like this, which again would give us then 1, 2, 3, 4, 5, and then would give us the overlap with the bigger pattern there. Yeah. So let's see how that plays out. It's possible that we already finished the retracement, as I mentioned, in which case our next targets would be based on this. So 29.13 to 33, which overlaps with this area here nicely. And no, here we already finished this one here, and which means actually this one I have to attach or stretch further to. That one goes further for now, since we're not sure if that is finished. That one goes till here to confirm or show that we finished the retracement here. Okay, so that's GameStop. We didn't update anything here. Barnes & Noble is also unchanged from our labeling. So again, we're the only thing that changes that we expect that we might cut down here. And we already have our take profit. Now, Novavax would be the next on the list, where we got another push down, so which makes things a little bit harder. Now we actually touched the 61.8 retracement. The candle or push up yesterday is a little bit of an issue here pattern wise, unless that is 1, 2, 3, no, 3, because this one is higher than this one, so it makes it hard. 1, 2, 3, 4. I mean, that might check out. So 2 might be here, 3 here, 4 here, and we reached the minimum target for that move. The low here is 761, and we hit exactly the 761. Yeah, so yeah, our January call options are in trouble here, so that's going to be a potential $250 loss in January once the options expire, because if that is not the end of the correction as a A, B, C free wave move, you can actually try to see how perfect that correction would be if it's. Do we have some additional? Yeah, we didn't fully reach the expected minimum target. We got within 10 cents of it. So yeah, we'll have to. So we'll hold on to our position here, and we'll just have to wait and see. I mean, we anyway cannot do much other than sell the options at a loss, or sell them at a loss, which does make sense. So we just stick with this for now and see how it plays out, which brings us to immersion. Immersion is also slightly red today, where we are currently wondering if this is the bottom. We will see it in the next couple of days, we're actually looking at the weekly chart here. We will see it in the next couple of weeks. If we stay above the 841 and the 61.8 retracement, which would then point towards this gonna be the next move up, potentially as wave 1, wave 2, that actually not being wave 3, but most likely wave 1, 2, and then we get a wave 3. So here, what do we have targets for immersion? We have 27, 27, 42. Yep, so that checks out. Costs, we're still waiting. So we got another push up. Question will be, will we eventually break the 879? As I mentioned the last couple of days, the entries here would not have been bad, because we could have had the stop loss at 652. Now we already have around $1,000 in cost, so we don't add to that position anymore. But we're waiting and seeing, or we were waiting to see if we indeed will get our push higher. Now stop loss, as said, one could bet on the retracement is finished here, and this is slowly developing into the next impulsive wave. And have the stop loss here. Today, it's obviously a different situation in terms of entering. The last couple of days, it was a nice situation with a very, very tight stop loss and decent potential. So where the trade would now be already at a 10% or 5% profit. And in between was at almost 15% profit. But yeah, we're just waiting here further to get some more candles, and we're pretty much waiting to break the 879 to have an additional confirmation that we're going up. NEO retracing further. So as we pointed out, based on the labeling, this looks like A, B, C. Now we are getting close to the minimum target for that wave C, but from the looks of it, I think we will go further here. So I would expect at least to hit the 432. We have 5 shares in NEO. So we already, 5 shares. Simply because, as mentioned, this is that was also a little bit of a FOMO buy, to be honest, because as I mentioned in previous streams, like here, this area is already where one can start to gradually enter, because we should be retracing 1, 2, 3. So we should be retracing this third wave, which means, we are only in trouble slight trouble once we break the 417, and the pattern becomes invalid once we go below 368. So even though our trade was entering here, exiting here, and it doesn't show our exact entry, but it was somewhere here. I don't know why it doesn't show that one. Yeah, so it seems to be a little bit random as to which entries and exit it shows. But overall, we expect to either turn around, or we actually expect to retrace anywhere into this area, and then from there start to make our next wave movement up. We'll see how that plays out. Even if this trade goes sour, our risk is not that big, and our investment with $25 is also by far not that big. So it's gonna be interesting to see if it follows the pattern though. And with that, we can let's for a change look at some crypto. We can see that Bitcoin started the retracement. Personally, I think that we have a potential retracement of this entire move, which, let's take a 4-hour chart. Maybe that is a little bit, so that we right now, so somewhere we have a wave 1, 2, but we clearly have a potential 5-wave move up here with an extended 5th wave. So 1, 2, 3, 4, and then we have 1, 2, 3, 4, 5 for the 5th wave. Which means we are potentially retracing this. We are, however, at least retracing this. So I would expect that we go down to 48,200, 84,200, or 80,300. At which point one might consider entering again. If we look at Ethereum, it's exactly the same picture. So again, here I'm actually looking at a weekly chart right now. What did we have for our chart? Where we can see 1, 2, 3, 4, and potentially 5 not finished yet. So there might be a 1, 2, or 1, 2, 3, no, 5 finished yet. So where we are likely retracing this entire move right now, which means, again, we would expect to go down to 2,980. That's another 10% down. If we look at an hourly chart, we probably are currently developing the first wave 1, 2, 3, 4, 5, A, B, C, and so on. We could also retrace further. So we remember the usual suspects for the areas where retracements terminate are 38.2, 61.8. If it's not one of those, then the 50% level, and if it's not one of those, then sometimes the 21.4, but very rarely. That's why it's not even here in my standard template, or the 78.6. So while I could be wrong here, of course, and we could see further upside, but I believe that we actually are going to see a retracement asset that takes us further down here. Yeah, also other cryptocurrencies are doing the same. So if we look at Storj or storage, which you can earn by running a node for storage, I think we're retracing this entire move. We already reached 38.2, but that doesn't look like an ABC move. So that might be wave A, wave B, and wave C. So I think there's also further downside. And XYO, which you can earn by using CoinApp. There we got a little bit more already on the chart. So from the looks of it, while 1, 2, 3, 4, 5. So I think wave 5 is actually here. So this might look like this. Then here we have a 3-wave ABC move. And here we actually reached already our target. We reached the 38.2 retracement. And yeah, so this would have been a potential good entry point again for Storj, if the correction is indeed only retracing this part here. So it's also possible that this somehow 3 waves. So it's possible that we're still missing a push here. Wave C target areas, you can see that there is also this area possible. Now my mouse is a little moving weirdly, but yeah. Yeah, so much about the crypto stuff. Oh, no, it's too fast, too slow. God. Moving on, right, you don't have to keep track of any predictions in the crypto stuff. I just added it today, so we'll see how we do that in the future. Moving on, we have a prediction for Amazon where we have actually upside predicted. So we made the prediction around 206, so yesterday around here-ish. And again, while there is the potential for a correction here, we expect the minimum targets here, so that's unchanged. And then we have no predictions for this. So next thing would actually be to check out NVIDIA. Yeah, my mouse is... Okay, where we don't have a labeling on the chart yet, we have a prediction of 150 to 162. So we made that prediction when NVIDIA was at 147 apparently, so it's not that much of a leap, yeah, but so there's still a little bit of upside, so to here. We'll work on that chart in the future at some point to get back on the labeling. SMCI, where we expect another push down already for some time, so yeah, like we see it's currently developing, so this will be 1, 2, 3, 4, and 5. Not sure what's wrong with my mouse, so yeah. And which brings us to SPY. In SPY, our prediction is we don't have a prediction on the chart. Okay, then we don't bother. And in the Nasdaq, we actually have a prediction on the chart. So in the X, we have the prediction that we will reach the, what do we have on the chart? 24,000. So this one here, 261.8. But this potentially is wave 1, 2, and then we get the next 1, 2, 1, 2, 3, 4, 5. Yeah. Yeah, so there we have to wait. So there's actually not much more to mention for today. So what's interesting is obviously keeping an eye on GameStop to see if we make the break here for another last wave before we correct, or if we indeed are already correcting here. Either way, God, yeah. So either way, we'll have our call options for next week. If they expire worthless, then so be it, and we pocketed another couple $100 in premium that we used to actually buy more shares. And if GameStop indeed rallies upwards, then we might get our shares, or at least some of those shares, called away. And yeah, that's pretty much it. I think it's nice to see that some of the things, again, well, with GameStop, our, let's say, macro labeling was, yeah, like a little bit wrong or a little bit off in the assumptions what wave we're in here in this part, but our targets were still hit nonetheless. We just had, in that case, 2 defensive targets, but moving forward, we have now a more precise target at 32, what did we say, 32.16. And but right now I think the more likely, or the more, the likely scenario is that we first retrace to the 61.8 retracement here at 22, 23, 23. If we apply, as said, an expansion here to the smaller move, then we get a target also similar in that area. This here doesn't need to be that far. That would be basically this move here. So for 1, 2, and then wave 3 basically reaches the 438.2. And on a lower scale, so if we just double check this, or that would actually be here, that would be wave 1, that would be wave 2, we actually reach exactly the 361.8. So I wonder, so actually I can modify this, yeah. So here we only need the 400 area, so I can hide the other ones. So to make this a little bit less cluttered. Yeah, my mouse is having some weird movements here, so apply. Do I need the 0% line? Maybe not. Okay, and then we can add another one, so which would be this one here. But and again, this one we only want till here, and there we only need the 300% options. So, God, stupid mouse. That actually looks nicer and not too cluttered. Then here we need only the, so we don't need the 0 line right now, and we don't need those. We want to keep track of that. And then here for now, we also, no, here for now we can keep everything. No, not that we also would need the 0 can go, and no, actually that's how it should be. Okay. And then for the retracement, we already retraced 38.2, so we're going to get rid of that, and I think we are going to retrace as at 61.8. So I think that's where we are going to go. And then let's actually add the expansion as well for now. So as said, the expansion would point us towards the same area. Yeah, so I'm gonna drag this like that, and that here we drag like this, and voila, 23, 23. So that's what we are right now expecting for GameStop, so that we have a wave 1, 2, 3 terminates in this area. And then here we have also wave 1, 2, 3, 4, 5. So 1, 2, 3, 4, 5. And the only challenge there, but with that strong movement here, it actually checks. Let's try to verify that. So if we add this one here, so this would potentially be our wave 1, and then we terminated 2618. So that would be the only thing that points towards maybe there's another push up first. Yeah. So because here we also have, if we take this extension for wave 1, 2, then we have here the 2618, which wouldn't just mean, again, we get another push, and that push would then, however, also, we don't have it on the chart right now anymore, yeah. But we'll just wait, and if needed, we adjust. So as said, short-term downside possible to $23, and then after that push up, or alternatively, there's still one more push, then we get our retracement, and then we get our other push up. Anyway, so that's it for today. Yeah, like there's still a lot of things we have to relabel. There are still a few things to consider. Overall, I'm happy that we finally are moving again, because if we take a look at, 1 second, at the account performance, then obviously it's been quite some sideways move. So after an incredible start after May, where we were up 67%, so since we can add the -12 from here, we basically gave back a lot temporarily by getting the GameStop shares assigned and having it decline. And now we can see we actually have a rally back up. So right now we are at around 62% return, or a little bit lower today. Yeah, so 58% return since May. And as said, I expect, while there might be a short decline here possible, that actually we'll get a push up further, and we might, I mean, don't want to jinx it and no promises, but we might actually still achieve 100% return in this portfolio by the end of the year. Our biggest play is obviously GameStop, but even the smaller plays like Barnes & Noble Educational or so add to what we have. Yes, we also had a few losing trades, so a few investments that turned sour, so for a couple $100. But still overall, all of those investments actually paid for with premiums we earned from writing options. So still a pity when we're wrong, but yeah, like I think the only two miracle positions where we are like, or three actually. So Faraday Futures Inc., where we actually, considering the premium we earned from writing options before they did their reverse splits, only have $40 net invested. So if we consider the options premium, so that's not a bad loss, even if it goes broke. SunPower, yeah, like, I mean, that's gonna be there in bankruptcy, so we can already see that that's pretty much a total loss in theory. So yeah, it is what it is, but also not too much. And Green Wave, that also went sour, and for the rest, we're actually relatively good so far. And it's going to be nice to see how this continues. It's going to be especially nice if we get a little bit more movement again in some of the stocks like GameStop and Barnes & Noble Education Inc. Yeah, outside of that, other plays are long term, and we might add to them at some point, might actually buy shares at some point, but it would require us to label lower waves, because on a weekly chart, otherwise we end up holding for quite a long time. But anyway, yeah, that's it for today. So thanks for stopping by. Thanks for taking notes, Rai. I hope everyone was able to take something away from today's stream. And as always, don't forget, like, subscribe, and enable notifications so you don't miss out future episodes. With that, I'm going to leave you to it, and we're going to see each other tomorrow again around roughly 5 minutes before market opens. So have a great rest of the day and a successful rest of the trading week, and then see you all tomorrow. Till then, bye-bye.